Everyone, it's Kirk here again at optionalpha.com. Thanks for checking out this quick video here, and I'm live. Of course, if you guys have questions as we go through these videos, just let me know. Shoot them in the comment section right below, and if you like this video, of course, hit the thumbs up and love symbol there. So the question here today that I want to answer is, can we trade options during low implied volatility? And really, if we can, how do we do it, right? Like, what are the best ways to go about it? How can we still be profitable doing it? The short answer to this is 100%. You can still trade options during low implied volatility. We know that we still have an edge when implied volatility is low. That edge doesn't go away. It's just really, really small, right? So what I always try to tell people is that selling options during low implied volatility is still the best way to do it, right? Now, during low implied volatility, you can still do some buying option strategies because you're not giving up as much to go directional on something or use a calendar or a credit spread or a debit spread or something like that. So you're not giving up as much when implied volatility is low when you do those option buying strategies, but long term, it's still not going to work out. Option selling strategies still work out when implied volatility is low. And to give you some context around this, what I always try to tell people is that when implied volatility is low, let's say you make $1 on a trade, and by dollar notional terms in options, that's about $100 on a trade. So if implied volatility is low, you make $100 on one single trade. Well, when implied volatility is high, you could, on average, make 7-8x what you make when implied volatility is low, right? So implied volatility is high, you take that same trade, that same amount of capital, same probability of success, the whole deal, and now you're at 7-8x per trade. So the key here is just wait for higher implied volatility to scale up, right? And this is 100% what our backtesting confirms. We've done 21 million different ways that you can trade options, and we're going to be releasing that software here in the next couple months. And it definitely confirms that when implied volatility is high, you make more money per trade on average, sometimes 7-8 times higher. So that doesn't mean that you can't trade during low implied volatility. You can, for sure. You still can do it. It's just that when implied volatility is really low, you want to scale down on your position size because your edge is not as great. You don't want to go all in, right? Still a good trade, still can generate some income, still can smooth out your equity curve over time, but it doesn't mean that you should be doing the 5% allocation during low implied volatility. And this is where people get burned all the freaking time. And I even did a rant on this 2-3 months ago, something like that, where I talked about, if you get burned during low implied volatility, when implied volatility is low and you've got too many positions on and too great of allocation, and then something happens in the market and the markets go crazy, and then you get burned, it's your own fault, right? To a certain degree. Like, your positions should be smaller during low implied volatility because you make it up on the back end with high implied volatility, right? 1 month. 1 month of high implied volatility covers 8 months of low implied volatility. So you can choose to not trade and just wait for those couple opportunities a year, maybe 2 or 3 or 4 times during the year, we're going to get that high implied volatility opportunity. Or you can do all of it and then just scale up when implied volatility is high. Okay, so as always, if you guys have questions on any of this stuff, let me know in the comment section. I'm going to be jumping in here literally every single day that I can for the rest of the year, just doing as many of these live videos as I can. I enjoy doing these. It's like the podcast for me, but I don't have to do all the editing on the back end. And if you guys enjoy it, let me know, and then add a comment right below and just let me know what other topics. I'm going to be doing these all based on topics that you guys basically want to hear about and want to have me talk about. Now, before we go, I want to direct you over to a podcast I think is going to be really, really cool in regard to what we talked about today, and that's selling option implied volatility when it's low. And that is show number 71 of our podcast. You just have to go to optionalpha.com/show71. And we basically went through about 10 or 15 different backtested option strategies in TLT, showing the differences between exiting early, low implied volatility, high implied volatility, the whole deal. So again, if you head on over to optionalpha.com/show71, I think that'll be a really, really cool resource for you that you can take with you, and you can see kind of all the backtesting stats from some of the stuff that we've been putting out there. So until next time, happy trading, and we'll talk to you guys soon. Thanks.